Then we're going to Facebook after. All right, we're going. All right, we're good. We're good. We're live. We're good. All right, we're good. Ladies and gentlemen, a Roku home run. How we did it, how it looked like, what it felt like. StitchFix post earnings analysis. We're going to give you all that. And we're going to even also show you why we believe it's a takeout name. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. How easy is it when good stuff comes across your radar? I've always heard people use the word, risk factors or risk units or standard position sizes. When people talk like that, again, everybody's entitled to their own opinion, myself very included, and it generally infers a lack of conviction. There was a time 11 years ago, 12 almost, when I first started with T3. And I was a full believer that you should take the same position size behind every trade because you didn't want your losers to be much larger than your winners, and you wanted to have a standard thought process. And no trader ever abides by that rule that I have found. I mean, very few. It's very rare. Most traders are really the type of people who will just randomly go heavy. And it's kind of funny because when I actually started applying conviction behind my ideas, probably back in, I would say it was more 2014 as a 15-year veteran of trading. I started in 99. When in 2014, I finally decided that this is not the way it's supposed to be. So what we did is we have a unique thing, and it's the only room out there that does it that I have ever seen that actually applies conviction behind a trade. And it is crucial for your success because you have buying power for a reason. I find it funny people with whatever 100,000, 200,000, 500,000, 50,000, 30,000, million, 2 million, 5 million, 10 million. People with large buying powers, what they'll do is they'll never use it once they get over a certain amount. They'll never really use a portion of their buying power, a large portion. We all know you're not supposed to go all in. We all know that as a general rule of thumb, that tends to be very risky. But what percentage of your buying power are you supposed to use? And if you're coming in there buying 100 shares, selling 100 shares, buying 500, 300, 1,000, 2,000, 5,000, 10,000, whatever your number is, you're probably applying it as a blanket across the board. Sometimes you'll apply it as a blanket based on dollar value and whatnot. And I have to really show you this because this should make your jaw drop. If your jaw is not dropping on this, you're probably not interpreting it the way I'm trying to actually tell you. So this morning we were watching Roku. We were watching Roku, and we apply the same algorithmic strategies that you could find all over the internet. All over the internet. We did a one and done here. So we're watching Roku in the morning. We call out the one and done long through 97.22. People hit a ton of home runs, and then a third to half of my room drops off. Literally, the online user just like tick, 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 tick. And this is what happened here. And I'm going to remove my gorgeous mug for 1 second just so you understand. I do this work for you. I do this work for you. Most of my ideas in the past 2 weeks, majority were 1 out of 10 and 2 out of 10 ideas. My 5 out of 10 ideas are based on conviction. Now, if I'm saying that it's based on your dollar size, prove it to me. What does a 5 out of 10 mean? What does a 3.5 out of 10 mean? We took the GME strangle, which our puts went up 800%. Let's not talk about that home run. I'm talking about this. Focus on the Roku. Okay? We took the strangle. So what I was saying was sell the calls even for a penny, even if you lose more on commissions. So you don't watch the position on your screen. Most people, I mean, your puts are up 800%, your calls are down 100%. You're up a ton of money. And that is what happened with us in GameStop. Obviously, we were part of the puts from last night. Congratulations. But just focus on the Roku for now. So we do this work for you. Roku 5 out of 10. So what does that mean? What does Roku 5 out of 10 mean? And again, I've shown it to you before. I'm going to show it to you again for those for whatever reason haven't seen it. It literally translates into a dollar amount. It literally translates into a dollar amount. 5 out of 10 means I'm buying between $5,000 and $12,000 worth of options. That's what it means. And on the stock side, it means 500 to 40,000 shares. Now, I know that's a little bit wider, but it depends if you're trading an Amazon or a Cisco or an AMD or an Intel, or a Google or a Facebook. That is my general rule of thumb. So there's a number of shares I take, and there's a dollar amount of options I take. So this conviction level, in which I shared with you here, literally comes down to the dollar amount. Now, I want you to watch step two because this was just I didn't sit there and copy one line. There's actually just kept for the first 10 minutes, it was flooding down. And honestly, I did not have enough room on my screen to show you the entire copy paste. So this is a consecutive copy paste. This is not me pulling this line and this line and this line, just so you understand what it feels like to be part of a simple trade like this where you're up $1.20 in 60 seconds. And guess what we're calling out here as we buy through 97.22? We're saying it's going to get over $100 is the call. Look at that. Gets right over $100. We caught even more, but forget about the $100. Look at this one. This is a 1 minute chart. Look at this 1 minute bar. And I just want to show you what it actually translates this to. Mark going back to sleep. David is in Las Vegas. He woke up 3:45 in the morning. Definitely deserves to go back to sleep. Another Mark in the room. Thank you, Roku 20% gain on account. You nailed it. Can you walk on water also? Haha. Cute. 15% on Roku. Same here. Just needed this today. Priyanka. Matt C. Quick $100 in Roku. Only 20 contracts sold too quick. Yes, you did. Kronos. 8,000 shares. One and done. Yeah, we caught another one and done on Kronos too. Kronos was the other name that we were focusing on, obviously, right over here, as you can see. 4,000 on Roku, thanks. First five-figure day in a while. That's $10,000 or more. Roku and Mark, thank you. Best day ever. You are the bomb. Took 100, got $3,500 in 30 seconds. $3,500 in 30 seconds. Please keep in mind it's 9:35 a.m. And then, of course, I have to jokingly put in the step three, which is honestly not even a joke. Step three is just relax. I was telling people at 9:35, 9:36, I was telling them, go home, log off. You are home, log off. Go do something relaxing, figure it out. Leave, call it a day. This is how it sounds like in the chat. And just relax afterwards. This is a small snippet. We obviously have a very large room here in T3, the largest. And with that room comes the most amount of people dropping off after you make a successful trade. Not only that, would you believe me? Well, you should, because I'm also have no reason to lie, and I'm doing this in front of hundreds of people, saw it in real time. Would you believe me if I told you we were buying? This is a 5 minute broker. Would you believe me if I told you we're buying in the 97.50s right here on the bottom of this green candle using predictive analysis? And we ended up holding this thing. I mean, I held it to right by 101. That's as high as I got. The stock actually got to $102 on Roku. And just to even show you, I'm not going to scroll through the entire chat. We were talking in the morning about Roku going over $100, and it opened at 97.30. Now that doesn't sound so bold. It opened up at 97.30, but if you remember, We called Beyond Meat going to $100 and Roku going to $100 last week. Before it happened, we were making these predictions. Today's the day we took it and we won. So we were just sitting there nailing longs in Roku today, just milking it. We had other really good trades too. I called the dead bottom of Baba and other stuff, which I don't really care to go over now. But you have to understand the difference between a room that has conviction. We know better than the rest of the people out there when to hit the gas pedal and when to hit the brake. In fact, our entire methodology and system is designed behind it. Instead of just showing you a chart and saying, this is what I like to do when this chart appears, all charts are not created equally. All stocks are not created equally. All trading environments are not created equally. And none of these strategies ever take that into account because none of these people know how to take it into account. Think about it. It took me 15 years to figure that out. 15. And I'm still learning. I mean, now I'm a 20-year veteran, but I started in 99. It's 2019. I've been active intraday trading for 20 years. 15 years before I realized how to do that, how to teach people how to keep their foot on the pedal and keep their foot on the brake. And that's going to be something unique. Another thing we don't do is we don't vomit 572 names. I don't sit there and make a filter. You know how our day starts? We come to you in the morning. I am sitting there and looking up every single news headline, doing all that work for you, applying it, understanding the robots, understanding the algorithms. And after I understand it and I pick the name, everybody has the strategy. Everybody knows exactly what is happening. Why? Because it's literally the pinned tweet on our Twitter. Here's the one and done strategy. Here's the 5-1. Here's the high. These are the strategies we do, and we do them in this order. There's no there's no confusion to anyone. This is our pinned tweet. There's no confusion to anybody for what is actually happening here. I love this that it's right on the front. I'm going to like it. I'm going to like my own tweet. There, I did it. I went ahead and clicked my own tweet. But like, I can't even begin to tell you how important this is for your success. There are traders who have made their years. I've gotten mid 5-figure texts. I don't want to start trying to hold my phone up to the webcam. I've seen $45,000 days. I've seen $52,000 days. I mean, these people made more money than me in Roku today. I didn't make that much in Roku. How's that? The room makes more money than me. There's definitely something wrong if the guru in the room is one of the top 5 most profitable traders in the room. I find that to be an inherent flaw because broadcasting is tough. Sharing trade ideas is tough. That should take something away. But if people who make more money than you, which there are a number of them in the room who make more money, there's traders who are making 8 figures a year. That's 10 million to 99 million. They're 8-figure traders, not a person, not this one dude, not this one gal, traders. And I find that humbling because that's the level which I need to get. That's my next level. That is my next level. To get to that point where I'm making 10 million a year. I'm not at that level now, but that is my next one step up to start making that sort of money. So even as a broadcaster in the Newsbeat Live Room, I have people that I look up to and strive to achieve. And that is very, very important in a trading room. Do not get bogged down by a bunch of names. If somebody is sitting there sharing with you a scan of names that you should be looking at, 99 out of 100 people will fail looking at that. And I'm not just fabricating it. 1.2% of traders become successful utilizing those techniques. So when I say 99, I'm sort of rounding it against. Would you be happy if I said 98.8% of traders fail using that mentality? Would that be more accurate? Probably. I rounded it to 99. That's based on statistical data, based on analysis of brokerage accounts. But I feel the real important thing is, as a trader, the ultimate like if you could say, Mark, what is the one thing you would tell me right now that would help traders become successfully, consistently profitable? I would say you have to understand which one of your trades are better than others. And most people will say, of course, Mark. Thanks, Captain Obvious. I get that, but it's not Captain Obvious. It's not Captain Obvious. What do you think we do when we do this? Why do you think we're rating these trades? We know how good these ideas are. Now, in case you're saying is 5 out of 10 a lot, it's a ton. 5 out of 10 is one of the top 5 highest ratings I have given this year. How's that? Out of 5, just 5 names, not even the number. Out of 5 names, this is one of the top 5 ratings I have given a name this year. 5 out of 10. I don't give my ratings lightly. I am very strict. I really try to milk that last drop of water from a stone before I offer you something to drink. So when we have a name like Roku in the whole room, imagine a whole room is sitting here looking to buy Roku before the market opens. You have people buying it in the pre-market, people waiting for the strategies, people applying their own things by buying it. And you want to know the power of the Newsbeat room? Look at the triple Qs this morning. Here's the Qs. Oh, flush. Oh, look, we're plummeting, guys. Look, we're plummeting. Look at the spiders. Oh, look, we're plummeting, guys. We're plummeting. Look at that early morning, the Qs and spiders. Look at Roku. Some people are saying you have to be going short or shorting some of these sub $5, $6, $7 names, which are really good for people with special accounts and special commission structures, but it doesn't help the masses. A name like Roku helps the masses. That is why we're successful, because we find names like this. We do the work for you in finding the names. We show you the strategies in which we're applying, and we're showing you us capitalizing on them in real time. Ultimately, that is the mode for success. Just my take. Again, just to show you one last time, just the very simple steps. We do this work for you. Look at that. Look at that. To me, this is more important than anything right here. This to me is more important than anything that I do, is to see members of the room talk like this. This to me is this is why I get up in the morning and do this job. This is why I get up in the morning and I'm a broadcaster here for T3. Because at the end of the day, I feel like I'm helping people. And if I cannot feel that way, if I was just after the paycheck, it would be a lot different. You can't be a good broadcaster if you're just after the paycheck. Take it from somebody who's been broadcasting for stocks for 12 years. Again, like I'm a 12-year stock broadcaster. So yes, I've been around the block a few times. I've seen a lot of things. And I'll tell you that when other people are succeeding around you based on what you're doing and you get your I mean the chat blew up. This is a snippet. The chat blew up way harder than this. To me, this is my goal as a broadcaster here at T3 to bring you guys this. And the beautiful thing is, you will know before the market opens whether or not I am bringing you something like that. You will know before the market opens if you're getting something like that. Okay, let's talk about StitchFix. So, name that I'm long from by like 15 bucks. I think 14.80 is my average price. I bought it on the IPO day when it IPO'd back in November 2017. Right? Let's just double check that. Is that when I bought it? Yeah. Yeah, it IPO'd back in November 17th, 2017, the same day as SailPoint. The stock moved all the way up. Sold a lot of shares here in the 30s. Stock moved up to 50. I still got a chunk of shares from that price. And now you see the stock is at 30.75. I want to talk about it. I think it's a very important topic here to talk about because I think this is a takeout name. And you could agree or disagree, and hindsight will be 2020, but let me explain it to you. Let's talk about StitchFix. I think this is a very important name to talk about. They reported 7-cent gain per share. That's versus the consensus of a loss of 3. So when analysts think you're losing money and you actually not only not lose money but make money, like they didn't break even, they made 7 cents earnings per share as opposed to a loss of 3, that's big. Revenue 408.9 million versus 394 million expected. 3.1 million active clients. That's a 17% increase year over year. CEO is Katrina Lake. I think she's founder and CEO. I think she is a phenomenal CEO. She grew her active clients to 3.1 million, 17% year over year. Continue to drive engagement with our existing client base. And here's the important thing. How many of you guys out there, just be honest, how many of you guys out there have seen the Amazon commercial for, you see like some Indian dude at the bar and he's dressed as like a preppy dude with his like whatever, his plaid shirt or whatever, and then he like looks over and he sees himself in a cool rocker black leather jacket. And he's sitting there and the other side of him in the black leather jacket, it's him, on the other side, he's looking at him and he's like, that's what I look like in a leather jacket. And he's sitting there in his little Amazon Prime thing and he orders the leather jacket. How many people have seen that commercial? You seen it? You see that commercial? It's kind of funny. It's kind of funny. So the point is, Amazon is trying to compete with Stitch Fix. What's it called? Amazon Wardrobe? You saw it too? Yeah. It's a popular commercial if you watch TV. So it's like Amazon Wardrobe, whatever it's called. They're trying to break into this business of selling you clothes. The reason for this is all the retailers are getting schlacked. Nobody wants to go to Macy's. Why the F on earth am I going to go to Macy's, find an Nautica shirt I want to buy, pay $69.99, but look, I have 10% off because there was a sale. So I'm buying it for $63 when I could get that same thing cheaper online shipped to my door. But Mark, I can't try it on. I can't try on the clothes. I can't try on the clothes. I love being able to try on the clothes because people like to see what they look like. Some things fit other people better than others. Me, I have goofy feet. I am 6'4". For me, my foot is like big, and I need to wear Skechers shoes. For me, my dress code is very simple: extra large in everything, like extra large tall. Like that's how I order. But there are people who like certain fits, certain cuts fit them differently than others. Ask any woman I've ever met. So, like Stitch Fix, what they do is actually allow you. Stitch Fix actually allows you, just like Amazon Wardrobe. If you don't like it, return it. You know how many people out there will not return something to Amazon out of sheer laziness and not even know how? Wait, I have to go contact seller, print out a return shipping label, drive out, drop it all. Oh God, screw it. I paid 50, 40, 30, 20, $10 for it. I'm just going to keep it. You know how many people actually do that? So, if you want to compete with Amazon's newest business, this is what they are pitching you on TV. They're paying millions and millions of dollars for Amazon Wardrobe. This is a direct competitor. This is a direct competitor for Stitch Fix. Introducing Prime Wardrobe. Step 1, fill your box. Pick 2 items or more across clothing, shoes, and accessories. What? 2 items or more, you son of a... Why can't I buy 1? I didn't know that. Step 2, use your 7-day try-on period to find the best style and fit at home. Step 3, check out and return. Use the provided return label and drop off your box at UPS. Ha ha! Who wants to do that? So let me get this straight. I click a button and it's at my door in 2 days, soon to be 1 day. It's going to be at your door between 1 and 48 hours. But if you want to return it, package it up, tape it together, print out a label, and drive over to your local UPS store. Not even FedEx. Sorry, we don't accept UPS. Key benefits of a Prime wardrobe. Try before you buy. You'll only be charged for the items you decide to keep, meaning you have to go back to step 3. What a pain in the butt. You get to choose. Select from great brands for women, men, kids, babies. This program is included with your Prime membership. Ooh, how inclusive to offer to sell me more goods. Wow. A resealable box and prepaid label makes returns simple. So they try to make it simple. Just pay your Uber driver to drop it off for you at the UPS store. Gotcha. Okay. So, I mean, here they are talking about the entire system. It's the newest thing, obviously, from Amazon. There's commercials all over it. Actually, it's the first time I'm looking at it with you guys. And I look at it and I'm like, Stitch Fix is going international. If I was Walmart, I would buy Stitch Fix. Walmart needs, if I was Target, I would buy Stitch Fix. Now, Stitch Fix is even at $30 is still very modestly priced as a company. This, believe it or not, is a $2.35 billion company. Amazon, want to guess how big Amazon? $855 billion. 2 billion, 855 billion. Now Amazon is going to do it themselves. They don't care. But how about Target? $43 billion company. I'll tell you, Target has some great clothing. Really does. Like if you're looking for simple, when I go there, my wife owns some. She buys those whatever pants from there. I guess they're like the yoga stretchy type pants. Whatever. They have cool T-shirts. I bought my kids' clothes at Target. Why not buy out Stitch Fix? Why not come to Stitch Fix and offer them $60 a share? They will disappear. You offer them $4 billion, they will disappear off the market as fast as you can blink. You offer them $5 billion, they'll disappear. It won't be a symbol anymore. You'll gobble them up. You do not want this company selling clothes before you. And that is exactly what is happening. You want to know what makes Stitch Fix so valuable? The fact that Amazon is going into Amazon Wardrobe. Now, I want to tell you, I want to show you something funny here and prove it to you. I'll even prove it to you right now. Does anybody remember when Amazon bought out Whole Foods? Does anyone remember that? When Amazon bought out Whole Foods? Do you remember what happened to Costco? Here, let me show you a weekly. Oh no. Oh no. Amazon is going to buy out Whole Foods. Let's drop the stock from 182 to 150. Decimated as the market was going up was Costco. And if you remember what we were saying, and there's Newsbeat videos and Newsbeat shows to go watch the Newsbeat shows back in June and July of 2017. And we were saying at the time, and I think it's archived on the bottom, you can watch the older shows. Anyway, point is, what we were saying was people are still going to go to Costco. They don't really care that somebody is buying Whole Foods. And look where Costco is today. Easily one of the strongest names out there, even in the current environment. With all the big down moves we've had, all these big down moves, guess what? This stock is $3 off all-time highs. Okay? Costco is even gapping down on earnings. It's like, what? Bang, bang, bang. Let's get right back and higher. What do you think is going to happen to a Stitch Fix? Now remember, I want to point out that Costco is a $109 billion company. $109 billion company that got so beaten up. What's going to happen with a little crapper $2.35 billion company like Stitch Fix? What's going to happen with this little $2.5 billion company that all of a sudden is going international, increasing sales, and competing with the giants? What do you think happens to companies like this? Somebody's going to gobble them. And proof of their growth is going to be in their forward projections, which they said for next quarter, not this one that they just reported. Next quarter, they're going to have revenue of 425 to 435 million. That's ahead of the 421 million expected. They crushed it. Granted, I'm watching the huge bulk of shares I have go up 7 points and change at the moment, so that feels good, to be honest, even though I have no intention of selling them. I'm not selling my StitchFix shares ever unless they get taken out, and then I sell them before the buyout is complete. That's the only way I'm selling my StitchFix from this point forward. Just so we're clear. I mean, as soon as I saw Amazon Wardrobe, I'm like, what? They're competing with StitchFix? Huh? That makes StitchFix more valuable. It's funny when Amazon competes with things. People think that it hurts the company. No, there is no statistical or empirical evidence of that. Remember when Amazon streaming came out? Remember when Amazon Prime came out? Here's a monthly of Netflix. Yeah, that really hurt Netflix. That really destroyed Netflix because Amazon wanted to compete with them. Here is the rule. Wall Street gets this one wrong every time, which I love, by the way, because it's a buying opportunity. Amazon competes with you, the stock gets decimated, and then it comes all the way back up and higher. That happens every time. You want to know what the next best stock is to buy? Look to see where Amazon is spreading their claws next and go with that company. If for whatever reason Amazon opened up a cheesecake business where they started selling you and delivering cheesecakes online, I would buy the Cheesecake Factory. I'd be like, that's a no-brainer. Definitely do this. Here's a daily. Definitely do that. If Amazon starts doing anything that hurts a company on the outside, to me, it always ends up being a huge buying opportunity. Because the only way Amazon's never going to own everything. They might have their hands dipped in the water of a lot of things or almost everything, but they're not going to own everything. So when you're actually looking at these companies fundamentally, you have to really think to yourself, what can give Amazon a headache? Not who's going to put Amazon out of business. No one is the answer to that. But who's going to give Amazon a headache? StitchFix is going to give Amazon a headache. And I know I'm not a CEO of a publicly traded company, but if I was and I was running Walmart or Target, why invest so much in creating and logistics and everything? They already have Walmart delivery and everything and whatnot. Why not just buy Stitch Fix? How easy would that be? Just buy out the damn company. Spend a few $1 billion. Walmart is huge, humongous, and it opens them up to a huge new revenue stream. Just so you know, Walmart's a $300 billion company. I remember when Walmart was getting beaten up, when Amazon was offering these services and whatnot, and they beat up Walmart over here. Yeah, how's that working? How's that working for Walmart? Walmart is not too far from all-time highs. How funny is that? How bullish Walmart was today. Someone in the room called it out, Lisa. What a great call she made. So when you have all these companies and everybody's looking at the Amazons, I think because Amazon is so strong, it creates buying opportunities elsewhere. As a result, Walmart, Target, other companies as well, I'm sure if I stop and think real hard, but Walmart and Target would be a perfect customer to take over Stitch Fix. So we have algorithmic levels and more. You can have all those algorithmic levels. You could be part of the Newsbeat service. You could see how easy it is when we have great conviction to make your money and walk away from the market. Just walk away. Make a ton of money and walk away. We could show you how to do that. For first-time users, it's $49 a month. For second-time users, contact T3. Go through the website. Email them. You're going to want to be part of it. Really, thank you. Users like you make the Newsbeat Live Room T3's #1 trading room destination. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.